What's up, you guys? You're back on Crypto Clear with Mia, and today we're back for another project review. Now, you guys know I'm always looking out for the hottest new projects with innovative ideas and that have the chance to make us a good profit. Now, you guys, I found a great one that incorporates all of the above, and its name is the ISSUAA Protocol. Let's get right into it. I want to show you guys what the ISSUAA Protocol is all about. Now, on the website, it claims that it is the next generation DeFi protocol for derivatives of real-world and crypto assets on the blockchain. The ISSUAA protocol is designed to enable creation, minting, and trading of synthetic assets reflecting the price of underlying real-world assets such as stocks, commodities, or indices. And the ISSUAA protocol provides unique and highly attractive tokenomics for its investors and its liquidity providers. So there are 4 advantages for the investors and the liquidity providers. And first, we start with the fact that it is the first decentralized finance derivative liquidity protocol without need for over-collateralization, empowering the attractive return at moderate risk for investors providing its liquidity. So what they mean by this first point is that there is one significant benefit to the way that they create new assets. So if you mint a new synthetic assets, you always need to make sure that there's enough collateral in the pool to be able to pay out the investor who owns this asset, of course. Well, the problem is that the price of the collateral and the price of the asset that you are mirroring as a synthetic asset fluctuate in value. So in order to make sure that there's always enough collateral in the pool, other protocols typically require you to pay much more than the value of the actual asset in order to have that safety cushion. Well, still, if the price of the one or the two assets fluctuate too much, then you might end up being liquidated. So the ISSUAA protocol has solved this differently than the other protocols, and I think for the better. The way they do it is that they mint new assets always as a pair of a long and a short token. So you pay exactly the value of the 2 tokens, and there's no need for over collateralization. This is possible as they use the stable coin, so the USDC, as collateral, so there's no volatility on that side. Additionally, if the assets goes up in price, the long token will gain value, but then the short token will lose the same amount of value, which means that the sum of the 2 assets remain the same at all times. So therefore, we do not need to over collateralize, and there's no risk for liquidation. The fact that they use the 2 tokens, so the long and the short, does have another positive side effect. As an investor who wants to earn yield by providing liquidity, you normally face a significant risk of impermanent loss if the original price of the token changes. However, as they have a long and a short token, you can provide liquidity to the long and to the short token pool. So in case of the price of the asset goes up, you'll lose on the short pool, but you'll win on the long pool. So this balances out pretty much, and even in the case of a 50% price move, the impact on the liquidity providers is just about 3%. So you get the attractive yield from their token rewards and trading fees while facing a very limited price risk. So the fact that the liquidity providers are facing limited risk compared to other protocols that are being used is a huge attraction for liquidity providers in this case. So another unique advantage for the investors and liquidity providers is that every single USD stable coin to be paid in by the investor or liquidity providers for minting of assets and liquidity providing in assets pool is working and generating returns for the investors and the LPs. So there you have that passive income. There's also a barrier-free access for everybody to invest, mint, provide liquidity, and trade of synthetic ISSUAA assets on the chain. And lastly, there are rewards of active investors and LPs, not only with transaction fees, but especially with newly minted and weekly granted ISSUAA protocol tokens. Moving on downwards, we see that it is powered by Polygon. So the ISSUAA protocol and its smart contract run on the Polygon blockchain and requires USD stable coins for minting of ISSUAA assets and providing liquidity. Now let's talk about its native token, which is the IPT. So I'm going to take you guys over to the docs, which is linked up here. If you click on here, it could bring you over to the docs. It'll look like this. Here I am in the Let's go for the IPT token. So the ISSUAA Protocol Token, IPT, is the native governance token of the ISSUAA protocol. It has 2 main use cases. The first being that it is staked. IPT is the basis for the voting power of users which participate in the governance process. So these voting include voting if an asset has breached its upper limit and should be frozen, voting on the price of the asset at the time of expiry, on the grants for service by users that supports the success of the ISSUAA protocol, and if new assets are allowed to be created. created. Second use case is a trading commission of 0.05% is earned for the IPT token, which can be partially redeemed when burning the tokens. The advantages of this token is that there's a limited supply, so the number of IPT tokens that will be issued is limited to a max supply of 100 million. Therefore, up to 75 million IPTs will be granted to investors over time. There's value generation by trading fees. So besides the trading fees of transaction volumes of the ISSUAA trading activity, which are directly attributed to the liquidity providers, an additional trading fee is kept for the IPT for every trade on the ISSUAA DAO, adding continuously to the IPT value over time. Then we have the reward voting. So as every voting process is rewarded with newly minted IPT, owners of the IPT are encouraged to vote correctly in each voting and have significant interest in the value of the IPT. So the voting power of each IPT owner in governance votes equal the number of staked IPTs the individual IPT owners have in their possession. And then for the fair distribution, there's once per week where a new IPT token are minted. So 3% of the delta between the issued tokens and the max supply of the 100 million. So by the ISSUAA DAO and granted to investors as rewards for providing liquidity to the liquidity pools and participating in the governance vote. So there are high rewards for being liquidity providers and investors. If we look once again into the documents, IPT token distribution. So here we see the weekly rewards volume. So every week, the 3% of unissued volume will be issued as a reward to liquidity providers. The following chart shows the distribution over the first 2 years, assuming that no tokens are burnt. So here we have the chart, which is starting upwards over here and gradually goes down as time goes on. And one of the liquidity pools that receive the weekly rewards will also be the IPT pool, which is aiming to increase liquidity of the IPT token. And the rewards for the liquidity providers are set at 80% of the weekly reward. This volume will be distributed evenly amongst the individuals in the liquidity pools. So as for the voters in the governance voting process, they will be rewarded with 20% of the weekly rewards. Then there's going to be voting points that are granted to those votes that are on the majority side of the vote, or not more than 1% away from the votes resulting for votes that ask for the price of an underlying assets. And if you show yourself outside of the majority, so you're a minority, then there are consequences for you. Now let's take a look at their token distribution. So 60% for the liquidity providers and the voters, 10% is at strategic partners and investors, 15% is for the early contributors, 10% is for the DAO, and 5% is for the early bird testers and bug bounties. So really good numbers here, as we can see, for the liquidity providers and voters, as well as the other people in the pie. So the benefits of this community. So the ISSUAA protocol has been set up as a DAO, which we know as Decentralized Autonomous Organization, from day one by the team of early core contributors to the protocol, who they comprise vast experiences and competencies in the crypto and blockchain technology, capital markets, global asset management, and derivatives. So the team themselves are convinced that laying the ISSUAA protocol development and exclusive governance via voting procedures into the hands of the community of owners of the ISSUAA protocol token is the right way to attract and retain the necessary competencies and participation for the future development and growth of ISSUAA as a truly decentralized finance protocol. This is always something that I like to see in a coin, is when they really involve their community within it. So we as owners of the ISSUAA protocol can have a say in the direction that we want the project to go in. So the purpose of this video was really to show you guys an oversight of the project, but I know if you go on the ISSUAA YouTube channel, they do have tutorial videos and they show you how to use their web app over here and how you can start obtaining these assets. So whether it's their native token or the synthetic assets that mirror real assets in the real world. So I invite you guys to check those out. Go on the ISSUAA YouTube channel. I will link it below. You guys can also look at the white paper. You guys can also take a deeper look into the documents. The documents, like I've said, I've checked out over here. I just want to lastly mention that they have also been audited. That's always something I want to look for. So check out their audit over here. And lastly, let's just check out their socials. So you can reach them on their Telegram, their Discord, their GitHub, and their Twitter. So quickly checking out their Twitter. This is a really good place to reach them at. They're very active on their Twitter. They have a good set of followers and they're constantly posting. So here you go. They're talking about the fact that they're live. Come join us for low risk, high reward yield farming with the best in-class capital efficiency and low costs on Polygon. So here they talk about all governance decisions decisions will be taken by the community of the owners of the IPT token via voting procedures. And then here they're asking you guys a question. So what feature do you think is the most relevant when deciding to buy a token or not? So you see that they're not only informing you of the latest updates and news on ISSUAA Protocol, but they're also asking for your input. So there you guys have it, you guys, the ISSUAA Protocol. I would definitely look out for this project. It looks like a solid project and it could just be the next one to Moon. So you guys check out the ISSUAA Protocol. I'm going to link their socials down below and stay tuned with the ISSUAA Protocol. I'll see you guys next time in the next video.